Alright, hello everyone, Nick Lump here. Today is Monday, September 24th, 2012, and I thought I'd change things up this week by recording a video instead to show some charts, take a look at some of the markets and a couple big themes out there. So, first thing to take a look at here, this chart is the US dollar index, which measures the value of our currency against a basket of some other currencies like the euro, Japanese yen, and so on. And what we can see really is the major trend over the last 10 years has been downward, meaning the value of our currency is falling relative to these other currencies. It's stabilized a little bit the past few years here, and if we zoom in specifically, just take a look at over the past 2 years, really going back to last summer, maybe 15 months ago. The dollar has been strengthening as the issues in the Eurozone continue to build, but very recently the Euro's made some progress, the dollar's been tipping over, and the Federal Reserve just announced its third round of quantitative easing. If you've heard this in the news, they'll call it QE3. Really what this is the Federal Reserve is basically printing a lot of money, and they're trying to stimulate the economy and to hold interest rates low. What you can see though is I think the US dollar it's been falling quite a bit, and this purple line I drew I think is a major line in the sand that if the dollar breaks below this, I think it will continue to fall quite a bit and lose its value. What that means is it could push other asset prices and specifically commodities much higher. Okay, so let's take a look at gold over the past 5-6 years about. It's been in a steady climb higher. Gold at this point is acting more so like its traditional sense of a currency, and it's almost the opposite of the US dollar, and the more dollars that we print as our economy is having trouble, the higher gold should go. Over the last year it kind of flatlined, it's been chopping around. It broke out above this purple line here, this resistance, and I think this breakout is telling us again that the dollar is going to continue to fall in value, and we should see other commodities increase as well. Now let's take a look at stocks. Okay, so here is the S&P 500 index, major stock market index over the last 10 years, where we had the bull market from 2003 to 2007, the crash in 2008, and our choppy, jagged rally back up. What I want to take a look at though is this range in between the purple lines that I drew. Back in 2007, we were bouncing back and forth in between 1575 at the high end, 1420 at the low end. But once we broke through, we bounced back, hit resistance, and collapsed from there. Interesting thing though is that we're back in that zone. We broke above 1420. What I think here in the near term and intermediate is we're fairly stretched at this point, so I think we could see just a pause a little bit, maybe a pullback back to 1420, which is really only a 2% fall from here. And I think what this says though is if QE3 continues to work and it pushes asset prices higher, we could end up making a run at the old highs at 1575 toward the upper end of this range. Could be toward the end of this year, maybe early 2013. At that point, it's really a question of if fundamentally companies can keep up, if the economy can pick up and strengthen again to really support those higher stock prices. Alright, so we'll see where we go from here, but for the time being it looks as though the dollar is breaking down, and that is pushing commodities and stocks higher. Thank you for checking out this video and for checking out my blog.